Okay, welcome back to the channel. Going to be talking about natural graphite stocks. It's a quick video. Why? Because natural graphite, all these batteries here, except for this sodium ion, needs natural graphite. But the next 5 to 10 years, looks like these batteries will dominate with sodium ion coming through once they streamline production. So sodium ion is small now. LFP is the biggest battery, like they're making the most of that now. They're both going to get better. So sodium ion is really abundant, which is why it's going to be cheaper once they mass produce it. But the energy density isn't that great yet. So I say share a similar opinion than the limiting factor. Also watch this video by the limiting factor. Goes through his thoughts on sodium ion. So the energy density, if sodium ion was to dominate even more, the energy density needs to improve, which it could do. And they need to just get it. They need to build those factories. All these factories for LFP are already pumping it out. There's more factories getting built, etc. Sodium ion will come along, but it's not going to be for maybe 5 to 10 years. And unless the energy density gets better, it could not be for high-end electric vehicles either. But that all can change if the energy density gets better. It's going to be a cheap battery anyway. It's going to be good for grid storage. We'll leave it at that. So anyway, natural graphite companies, it's going to be a big demand for natural graphite in my opinion. One of my top picks, iTech Minerals. You can buy this whole company for $30 million. They get a huge resource. They have like 50 to 100 year mine life, doing heaps of tons per annum. Way more than competitors. So, huge resource among its competitors. Location amongst competitors, very good too. You want existing stuff around your mine. You want it close to existing workforce, existing roads, existing renewable power. And iTech Minerals has all this. RNU is very close to them. You can look at their study to find out that iTech Minerals probably will have a similar study to them, given everything looks the same. So they spend $100 million, and they can make $100 million just selling it out of the ground. They spend $100 million more. They can process that stuff out of the ground to round balls and get upside there as well. So it looks good for iTech Minerals. They do have to do a bit more drilling, perfect metallurgy, but guess what? That's when you make the money, when they come out with announcements that they've done this, done that. Also, high interest rates. No one's racing out to buy stocks. There's not free money floating around as it was 2 years ago when people were getting free money, etc. So iTech Minerals, you're going to buy low, sell high. I think this is going to be a good stock. Huge mine life in South Australia with existing renewable power, main roads, existing workforce. Ticks all the boxes for me. Move along, SGA. These guys are in. They got huge mine life, huge grade. So grade's important, but not super important. Like it is important. Like do your own research, but grade. I prefer something near existing stuff than high grade. If you've got 10% grade, better than having something out of the middle of nowhere that's using diesel power, in my opinion. So these guys, yeah, existing stuff, 2 kilometers from things, so that's a tick there. Yes, anyway, I'm not going to do too much detail of these companies. Anyway, they got huge mine life, huge grade, could go well. You don't know, some companies will go very well, some might not go as well as you think. You could pick a handful of the best ones. It's not financial advice, by the way. Anyway, we'll leave it at that. ID6. So these guys, resource size is on the small side. The drilling probably will get a bit more tons with more drilling. Probably show that on this, as they're doing. They do have to truck it all this way, which I don't like. Not sure why they're doing that. Where they could probably just process it all here. Go to Esperance and ship it. Not really sure. They probably know more than I do. Anyway, they've got about 1 million tons in the ground, which is a 10-year mine life doing 100,000 tons. ITM will probably have like a 50-year mine life doing 200,000 tons because they're going to have a lot of stuff in the ground. IG6, not quite yet there, but they got more stuff to drill, so they could get to a 50-year mine life doing 100,000 tons, which you'd hope. Also, they're doing the they got a pilot plant to make that stuff out of the ground into round balls and coat it all in-house, which is a big tick as well. Because there's no shortfall of graphite in the ground. There's going to be a shortfall of the coated round balls going into the anodes of batteries. And when that happens, the price will go up. And yes. So anyway, EV1. These guys, I think they have to raise $100 million. 120 million to 80 million EBITDA, which is slightly lower than its competitors, I believe. Some other competitors will spend like 100 million, do one for one, so every $1 million to spend will be $1 million in EBITDA. These guys are 120 million to 82 million. So a bit the other direction. But who knows, they could go well. I haven't dove that deep into them. Their resource size is currently only 17 years, probably doing tons per annum. How many tons per annum are they doing? So I'd say compared to competitors, these guys are just a bit behind. Could be wrong. You might want to dive deep in yourself, compare the numbers. But for what I've seen, the numbers are just 10% behind or something. Anyway, moving along. Could be wrong, so don't get angry at me. Yeah, I'll leave it at that. This company, you can buy it for about 66 million. Comes with a mine. They're currently building the mine right now as we speak. So later this year, they are going to the battery mineral space. They're going into the other graphite areas. Though if the price goes crazy, they could switch. Although they say they're going to make 60 million in EBITDA. So I think these guys are like spending 45 million, 50 million, and they're making 60 million in EBITDA. And then after all costs, they're going to have $25 million Australian in the hand after tax, after all costs. And if they're doing that successfully, if not even the 25 million, even if they're doing $15 million, which is about half of what they say they're going to do, that'll be quite good for them. And if they're doing that well, guess what? They could double production. Instead of doing the 40,000 tons per annum, they could do 80,000 tons per annum, making $50 million after costs. And guess what? If your company's making $50 million a year after tax and all costs, it's going to be worth quite a lot more than this. Quite hopeful in this. We'll see how it plays out. They got to get into production, iron out all the kinks in production, etc. They got grid power, which is a huge plus. So high hopes for this company, and we're not going to have to wait. ITM probably have to wait a while. They have to drill it out. We have to wait for the graphite shortfall to happen. WKT, it looks like we're just waiting for them to get into production. Anyway, moving along. VRC is a good one. These guys had existing graphite mine in Ukraine, obviously stopped by the war, but I think they could make $30 million a year from it. And if they want to upgrade it, they wouldn't have to spend much money existing, so they could just upgrade it for a much lower price than building a whole mine. So maybe upgrade it for 50 million or something and make $100 million per year. But that is probably not going to happen until the war stops. Yes, but that's just one part of them. Then they also got this big one in Tanzania. So like EV1, they got a big thing, probably even better than EV1's. And they got the kicker up the sleeve, which is the Ukraine mine. So they're one in Tanzania. Spend 195 million, spend 173 million and make 195 million per year. And they don't have to do that all at once, because they're going to do a smaller project first, where they spend less money. So then possibly they won't dilute the share price as much, spending less money doing that smaller project. And then banks say, well, we see you doing well off that project, we'll give you this money on better terms, or investors will give money on better terms, etc. going forward. And they got a 22-year mine life. So huge mine life, huge resource. And they can drill more and probably find more as well. And they got plans to go downstream. So they're going to go downstream in America, I believe. So it could go well. Yeah, feasibility study taking place. So we'll leave it at that. So go over, to dumb it down, you need to know how much does it cost to buy the company you're going to buy. How much cash they have. How much is it going to cost them to build the mine. and then how much will they make per year on the mine. So the capex is 100 million. Rough figures for natural graphite I found: for every 100 million you spend making the mine, you want to make that in EBITDA. So the more EBITDA you get for the less capex, the better you'll be. Some companies are spending a bit more than 100 million to make 100 million, some a bit less. You probably want to go for the one spending a bit less, but you obviously have to research the whole company as a whole, see how it compares to competitors, etc. Then you got operational costs. So operational costs, you're in the middle of nowhere. This will also, they sort of tie in with capex. If you're in the middle of nowhere, you probably got high capex, high opex as well. So diesel generators in the middle of nowhere, that's bad. SYR has diesel generators, big company, billion-dollar company, but guess what? They're getting weighed down by diesel costs. So close to existing renewable grid power is the king. If you're investing in a natural graphite company, close to existing renewable grid power is what you want. And then you want existing everything else: existing roads, existing power, existing workforce. So existing, big keyword. You don't want renewable grid power. It's close existing renewable grid power, because that's going to save you a lot of money. Therefore, you don't have to raise that money, diluting the share price, etc. So a big one of all these, ITM. Adding here big resource, because you want a lot of years mine life, because you're going to spend $100 million to build the mine. You want to be able to just mine that forever. Spend the $100 million. So why spend $100 million for a 3-year mine life? Because you're resource constraint, where you can spend $100 million and have 50 years, even though you're not even going to use that 50 years. So yeah, looking at all these factors, adding them up, I see ITM above the rest, in my opinion. And I like WKT as well, because they have they might be in production later this year. So that's it for me. Let me know if you're going to comment your company below. Just send me all these things here: how much to buy them, how much cash they have, how much to build the mine, how much they'll make per year. And if you can beat ITM, I'll be impressed. Although ITM doesn't have a study yet, we're just guessing that's going to be good. Yeah, so I'll leave it at that. Let me know your stocks. I think I've seen every natural graphite stock. So yeah, send them anyway with those rough numbers.